You're listening to The Real Wealth Show with Kathy Fettke, the real estate investor's resource.
There's only a handful of real estate forecasters that I've followed over the years, and today's guest is one of them. I'm Kathy Fettke, and welcome to The Real Wealth Show. John Burns founded John Burns Real Estate Consulting in 2001, and he's been helping his clients understand shifts in housing demand, supply, and affordability since then. John has a bachelor's in economics from Stanford University and an MBA from UCLA. He works in Irvine, California, and he's here with us today on The Real Wealth Show. So John, welcome back.
Oh, thanks, Kathy. How are you doing?
I'm doing well. I am at my mom's, so that's why I'm at a different backdrop. But I really am always so honored to have you on to help us understand what's going on in the real estate world. And you have your finger on the pulse of that with so much data at John Burns Real Estate Consulting. I mean, that's what you've been doing since I've been following you for over 15 years. And I got the chance to hear you do a presentation recently where you were kind of surprised at how things have turned out in what looks like a V-shaped recovery so far in real estate. So let's talk about that. Would you call this a V-shape?
I think it's beyond a V because we're now better than we were when it started. So,
wow.
I've had two, I'm talking about the for sale market here, but I've had two home builder CEO clients, big builders, tell me this is the strongest market they've seen in their careers. And they've each been in this for 30 plus years. So, no, I know. It's crazy.
We're having that same experience, as you may or may not remember. We've got two subdivisions in Reno, one in Carson City, one in Bozeman, one in Tampa. And then we also sell new homes to investors looking for rental properties. And we have the same story. I think in our Park City homes, we sold 6 out of 8 townhomes that we released just last week. It's incredible.
To second homes mostly?
No. People are, as you know, leaving cities and moving to the places they always dreamed of living.
Okay.
When we started these subdivisions and, Park City was kind of obvious, that's popular, but Bozeman wasn't. But if you think about it and you have the chance to live anywhere, why not Bozeman and be near the fishing and the climbing and the skiing? So, I mean, are you seeing people moving even to those kinds of areas?
I just got off the phone with somebody who was telling me how hot it was in Sun Valley, Idaho and Coeur d'Alene, Idaho. So clearly, yes. And Lake Tahoe near Reno is just absolutely on fire right now. We've been doing some work there too. I mean, people are buying homes, second homes, sight unseen.
Really?
Yep.
Because they just don't think there'll be enough of them?
Because they just don't want it to go up in price before they can come see it.
Wow.
I mean, I'd like to do some more consumer research to really understand all of what's going on here, but the anecdotes are just amazing.
So let's dive into the numbers, because you did just say that it's maybe the best sales on record. That's amazing. When you say that, are you saying that this time compared to last year, we're ahead in sales volume?
I think we're talking more about the mismatch between demand and supply. There's far more people showing up and wanting to buy homes than there is supply. Mm-hmm. We had 2 weeks ago, one of my clients in Riverside had a 24-hour camp out in 105-degree heat. I mean, we haven't seen that in a long time. The number of homes for sale are less than they were in the 2000s, so we're not at all-time high levels, if you will. But the mismatch between demand and supply is so huge, and it's driven by people that are actually, be underwritable. It's not stupid mortgages this time. And so I think we're in the midst of seeing prices accelerate much more rapidly than anybody would have anticipated.
Would you have had any idea that you'd be saying this back in January?
I was planning on saying the exact opposite. So, in March, I was planning on saying the exact opposite. So in January, we were planning for more of the same, just kind of a steady Eddie, 6 to 7% volume growth, 4 to 5% price appreciation like year. Then sales fell 85% in our math during COVID, and now they're back up to where they were higher than a year ago, much higher than a year ago. So,
yeah, I'm so curious too if it's people leaving the cities, because that would make sense. I mean, my sister and brother-in-law manage an apartment in Palo Alto, of course, right in the Silicon Valley, and they have the most vacancies they've ever had. They've never had vacancies. They have 9 right now in that apartment. So are you? But you're also seeing apartments are strong, right?
apartments are much stronger than I thought. I do have some color on that, though. The people are continuing to pay their rent because the government's giving them the money to do so. I think those that have lost their job, and if you stop paying your rent, it's pretty hard to go rent an apartment somewhere else. So I think people are paying up wisely until the lease expires, and then they can just find a different solution. I mean, the Bay Area, that's an extreme example where almost all the job growth there has been renters, and so almost all the job losses are renters. And then now, if you make $100,000 a year, and you could never buy anything if you made $100,000 a year in Palo Alto, now you can go out to Modesto and buy a really nice house and work from home. Our guys in Northern California are seeing a lot of exactly what I just described. We're seeing campouts, bidding wars, 2-3 hours from the Bay Area.
Okay. Yeah. So they can still go to work that 1 or 2 days a week that they might have to, but the rest of the time they can be out of the expensive metro areas.
Right.
And not just expensive. I'll tell you what, I like to test the world a little bit with my Facebook posts, and it helps me with interviews because I get kind of an idea of what people are thinking. And I just posted, because I was really just curious, it wasn't political. I said, how comfortable are you putting an American flag out in front of your house right now? And because I really don't know where I live, which is close to Santa Monica in Southern California. I'd be kind of terrified, honestly, because the American flag seems to be associated with Trump followers, and that doesn't go over well in Santa Monica. That just had pretty major riots over that. So I really just wanted to know. Now, it was very interesting because I would say 95% said, of course, what are you talking about? Why would you even ask such a dumb question,
Right.
But there was, though, quite a few who said, no way, no way would I put a flag up for different reasons. So, I mean, do you think some of the fear of the riot, or just, what's going on in some of the big cities, is having people want to move out?
I mean, Santa Monica was an area that saw riots, so I think you feel it more than most areas. I mean, how many streets in America have had riots in the last 6 months? I don't think so. And they generally tend to be in non-residential areas too. So I don't hear that, but you do always hear that the suburbs are safer than the urban. Always. So there is an element of that, I'm sure.
But maybe more than anything, I mean, it's a few things, right? If we're going to be in a new normal, who knows if this is the new normal, but people want more space. Right. And also the cities maybe just aren't as sexy anymore. If you can't go out and do the things you would do in a big city, what's the point?
Well, that's been the big consumer spending shift we've seen is the experiences you used to be able to do. Even going on vacation, that's all been taken away from you. And if you've still got your job and you're spending all your days in the house now, you're remodeling your kitchen, you're redoing your backyard, you're moving. If there were 4 of you, but 2 of you were gone all day, but now 4 of you are there all day, it's just too crowded. That's what we're hearing. And the remodeling business is booming just as much as the for sale business too. So this is definitely a housing phenomenon. It's not, and that would not be mortgage rate driven, right? That is just, what's the priority? It's my house.
Yeah, right. And if you might discover that being an hour, as you said, or 2 hours away from work, you can have so much more. You can maybe own versus rent in town. People maybe are leaning towards that. So with that said, I mean, this is the billion-dollar question. How long would this last? I mean, I've been hearing rumors about, just recently the Fed said that there was the target of 2% has been adjusted and they can go beyond that. So that tells me maybe they're expecting inflation, and with inflation, they tend to raise rates. I mean, what do you see, let's say, a year from now? Will we be having the same conversation? Very difficult to predict, but.
No, it is. I mean, we should be having a conversation about inflation a year from now. That's very muddied because some products will probably be less. Rent is a huge component of the inflation index, I think 30 to 40%, and I'm expecting rents to fall in the short term here and then come back up. So maybe the CPI index will be a bit misleading. But the market is betting that long-term rates are going to stay low for a very long time. Even though the Fed did just say we'd like to create some inflation without raising rates. I'm not smarter than the bond market, so I'm just going to go with what the bond market is saying and assume rates are going to stay low.
So maybe that's what they meant by that, is we do see inflation coming, but that doesn't mean we would raise rates like we might in the past, because that inflation is not necessarily economic output related. It is just money printing related. Right,
exactly. Yeah, and we want you to go start spending it, basically, because that'll allow people to employ more people. They've shifted to more of a full employment policy is how I read it, than a full inflation policy.
So with all of this going on with the builders, are you seeing them acquiring more land and gearing up to do more, or are they just trying to get through what they have?
The land market's on fire. So they're growing. A number of them have also told me this is the best balance sheet I've ever had before. So I can take more risk. I can buy more land. I can develop the land myself. The publicly traded home builders have all gone to the bond market and borrowed a lot of money at a very low interest rate that's not due for a very long time. So that gives you the opportunity to go get more aggressive. I'm not seeing stupid aggressive. I'm just seeing a lot more aggressive land buying we've seen for the last few years.
Isn't that amazing? Oh my gosh. Is there a fear of overbuilding?
Not yet. Actually, the number of actively selling new home communities today is 5% less than it was a year ago. So that's what's driving some of this, Kathy, is they were being very cautious going into this. And then it looked like they were smart being cautious when COVID hit. And then the market came roaring back on them. So they're like, I've got the balance sheet to do this, and I've got fewer communities than I did a year ago. I'm just trying to get back to where I was and then grow on top of that. The one thing I will say that is pertinent to a lot of your clients your listeners, is this trend to build newly built subdivisions called build for rent. Mm-hmm. We're seeing so much capital flow into that. We're having conversations with people about when is this going to get overbuilt. So little of it is under construction right now. I don't think that's the case, but those conversations are starting to happen, particularly in Phoenix.
In any specific area or just across the board?
Pretty much across the board. But you're seeing some of the drive to qualify for sale markets becoming drive to qualify rental markets, like Casa Grande and Buckeye and Goodyear. And I just don't think there's room for 1,000 rental homes in those markets. The first couple hundred will probably do fine. We'll see.
It's new and untested, that's for sure. The thing that does give me a little confidence, and I'm not sure what their exit strategy is, we're actually looking at some build to rent right now, is that couldn't you just start selling houses off one-off if you run into trouble, or is that? Yeah,
well, it depends on the zoning. Some of them are zoned as multifamily parcels, but that is the opportunity too. It's actually, low rates is actually making it more challenging for them, because now you see the home builders coming in and paying more for the land because they're going to be able to push the for sale home prices.
Well, if they're paying more for the land, and I just read a report, I'm sure you are aware that there's a lot of concern of building supply costs going up. Have you seen that?
The NAHB calculated, Rob Dietz calculated, lumber costs have gone up $14,000 a house this year. So, Yeah, and I'm hearing all sorts of supply shortages. Appliances, this seems to be a problem for everybody. And then there's a lot of little things you need that just apparently aren't manufactured in the United States, like fuse boxes. So it's, I mean, so a fuse box doubles in price, that doesn't kill you. But if it takes you an extra 45 days to finish the house because you need the fuse box to show up, that cost of capital hurts.
Absolutely. Where are those made generally? China?
I have no idea. That's just something I'm guessing overseas, but
supply shortages that, there was a lot of talk about this in March, and then all of a sudden it seemed to not be a problem. It's interesting that it's showing up now. But with land prices potentially going up, if there's so much demand for it, and the cost of materials going up, and I don't know if labor costs will go up or if permit fees will continue to. I would guess they might, because cities are going to be needing money. That just translates into higher home prices, right?
Exactly. Yeah.
Yeah.
But I think the costs are going up across the board.
Isn't that amazing? So what do you say to all the headline stories that say, oh, just that foreclosure, crisis is on its way. Just wait until the moratorium is over, which I believe has been pushed to December. What do you say to that?
Well, I do think we're going to see more foreclosures next year than this year. So, that should put a damper on things. The economy seems to be coming back faster than most people thought, including me. So if we're back down to, say, a 5 or 6 unemployment rate when that happens, I don't think it's Armageddon. In fact, and if rates are below 3%, probably somebody's still interested in buying that house, so it's not sold at a big discount. In fact, all these single-family rental companies are buyers of those homes too. I actually think a lot of them will try to buy the loan to get to the house, and we won't even see a lot of those homes make it to the auction.
Well, because there's so many more savvy real estate investors than maybe 10 years ago as well. There's so much education.
No, that's exactly right.
I started this podcast, when podcasts first came out, but I was one of the first, and there were only a handful. Today, everybody's got a podcast. So the way to do what you just said is more available to so many people. And there's one more thing. Banks don't really want a foreclosure crisis, right? They kind of learned that they don't want that, and they found ways to not foreclose.
Well, and I'm glad you mentioned that. So they learned their lesson that foreclosing on people drives prices down on themselves for their next foreclosure. So look, it appears to me that the loan documents were written this time around to really encourage a loan modification, because people lose less money if I can keep the person in the house and restructure the mortgage. So I think that's going to keep foreclosures down too.
Yeah, it seems like, Florida being one of those markets where it was very difficult to foreclose, and they took years, sometimes 5, even 6 years, or just never did. And from many of the contractors I met, they were actually getting to a point where banks were hiring them to go fix up the foreclosure and act like a flipper, get the house up and running and looking nice, and in the meantime, just have the tenant live there, not paying, and just avoided foreclosure at every cost, and short sales as well. So that's been my thought. If you're waiting for 2009 to happen again, probably not going to happen. No,
the distress this time is going to be in the commercial real estate world, retail, office, good chance of some apartments. That's where I think the big institutional capital is gearing up and ready to move. Me too. And I could not make an offer on apartments over the last few years. I thought maybe we could build some and make it work. Now we've just hired an acquisition manager for that purpose, because I do think there will be opportunity. But what are you going to do with office space or retail space if there's not demand? Are there any builders out there looking to do something else with that space? Well, going into this, there have been a lot of builders focused on buying old, well-located shopping centers, and Brookfield would be the biggest. They bought 165 malls from General Growth knowing that a lot of them needed to be redeveloped and the corner of the parking lot could become a great apartment complex. Now they're stuck with all those malls without the tenants paying. So they're not, that's not working so well right now. But I do think, I know that they just raised a bunch of capital, and I think that will be the story of the next 10 to 20 years, is a lot of repurposed retail that does include some residential, because they're in great locations.
Right. Yeah. So they could be repurposed into housing or warehouse. I mean, what's the hottest thing now in commercial?
Yeah, the last mile warehouse is pretty hot, but I know that anecdotally. That's not really my expertise.
Yeah, sure. Okay. So are you seeing this across the board? I mean, one of the things that is so great about your data is you're in so many cities, and since the beginning, you were the reason. I followed you so closely in 2006, and you're the reason, you and Robert Kiyosaki, that we got the heck out of California. Well, unfortunately, we kept 2 properties and didn't completely listen, and bought in Texas, because your data was so clear. It's like California, way overpriced, Texas, underpriced in 2005. How did you know that?
I don't know if I was as crystal clear on that at the time as you remember, but
No, you did. You had the index where it would show
index.
Yeah.
I mean, there's some of it's data, some of it's qualitative. So we've got an office in Houston, and sales are strong throughout Texas, and there's a lot of California license plates, and so you know where the demand is coming from. And I don't know if you remember, but the governor of Texas actually got on a plane and came to California to recruit companies. You know, would the governor of California ever do that? I don't think so.
It wouldn't work either way.
Yeah,
hey, come over here and pay a few more taxes, why don't you?
Yeah, so, I mean, the pro-growth economies are pretty obvious. Everybody knows what they are, and that's where you move. And those haven't changed. It's still Texas and Arizona and the Southeast and Florida, where we're seeing a lot of in-migration.
Yeah, and I mean, at least in some of your forecasting, you expected that, I think, until 2026 or so. Is that still true?
Well, yeah, we did with a book we wrote, did a forecast until 2025, I think it was. We did a 10-year forecast out on the demographics. You know, the economy can cycle, as we're finding all too well, up and down during that time. But the demographics said that we needed about 1.5 million homes built per year over that 10-year period. And we've been building less than that. Now I think we're going to build more than that. So that's probably where you're coming from. You know, one of the things here that is a little bit political is 1/3 of our population growth usually comes from outside of the country. And, you know, the borders are closed right now, frankly, going both directions. So that should restrict some of that long-term growth.
Interesting. Yeah, it usually grows by 1/3 of people wanting second homes here, or
no, 1/3 of the population is usually the 1/3 of our growth is usually people moving here from other countries, and the other 2/3 is us just having kids and growing internally. And
wow,
clearly that is not the case right now.
Do you believe that we will be aging, kind of an aging country, the way that Europe and Japan have gone, or are we creating babies here?
So actually, the birth rate has slowed down during this whole thing. So
wow.
We've looked at that. That is part of the forecast. We are slowing down from where we were, but we're not forecasting Japan, which has really been bad. In China, because of all those years of the one-child policy, is going to be really bad demographics too. Ours will be not as good as they used to be, but it won't be that bad.
Interesting. Well, I'm happy to say my daughter has contributed with the birth rate.
Yeah. Congratulations.
Cute little grandson. Thank you. All right. Well, then, if there was an investment property you would buy today, where would you buy it?
I might duck that one. I mean, it's really about the price and the location, and I can't answer that statement. Could you answer that statement?
Well, you know, it's funny. We just decided to try Airbnb with a little guest house, and it's been booked every night. It's been incredible. We keep raising the price and they keep coming. So I almost would consider another Airbnb, except that the restrictions around that are so difficult in California.
So
But
did you put an ADU in your yard, or what did you do?
we did. We were planning
Okay.
on just using it as an office, but then we thought, well, let's just see what happens with Airbnb. And it's been
Yeah.
incredible because people are now, like you said, not able to get on airplanes. So they're going to go locally, and there's 10 million people who live nearby. So,
So, one thing I'll mention, because that you spurred my thinking on that, was Portland just got rid of single-family zoning and allows you to tear down a home and put 4 homes on the same lot.
wow.
That just happened. So I don't know, if the NIMBYs are going to come out and really make that not happen. But that seems like a pretty good opportunity to me if you can buy an old home and then put 4 new homes on it in a good location. Obviously, the homes will be smaller. I wonder how the math works on that.
Ooh, I'm going to tell my sister about that. Now, is that just in Portland, or
Just the city of Portland? Yeah.
just the city of Portland? Wow. Okay. So now, wasn't that something that was overturned or something? I mean, do you think other cities will adopt that?
I think Minnesota started it a year ago, and if this has been overturned, that's news to me.
Well, I don't know overturned, but something Trump did overturning.
No, this has nothing to do with the federal government. This is total local zoning law.
Yeah. Okay. Yeah, it was the, I should know what it is, but where you could have low-income housing in the suburbs.
Oh, yeah, that was something completely separate.
Totally different, yeah.
Yeah.
All right, John, I know you've got so many things to do. I really appreciate your wisdom and insight here. It is really shocking. I know for you, too, you were expecting a different conversation in March.
Definitely, yeah.
Yeah. Where did you think it would go? What did you think?
We were preparing for Armageddon in March, April. I mean, mortgage rates, if you remember, rose to 4.5%. The mortgage industry needed to get bailed out by Mark Calabria, which they did. We were heading into a recession. And then if you told me to bet on the SBA doing 14 years worth of loans in 14 days, and then the IRS cutting everybody a check in a matter of weeks, I would have said that'll never happen. And it did. So, and I still think that's one of the reasons why we're really recovering strong right now is the government pumps so much money into the system. There may be inflation and other things to pay for that someday, but it really worked to get the economy back on its feet again.
It sure did. Yeah. My concern is that it really works for people who own assets that will increase in value, but for everyone else just buying groceries and rent. Now you said inflation may not show up in rent. You think rents will go down, but then eventually go up?
Well, I think the job losses that have happened are more skewed towards renters. Mm-hmm. And a lot of this entry-level home buying is coming from renters. And we have a 30-year high of construction of apartments that haven't yet finished that are about to dump a lot of supply on the market. So I do think rents are going to fall. But so far, there's been very little distress in the rental market. The one I track, I don't go down to the Section 8 and the lower levels. I hear there's a lot more distress there. But I think there's more rental distress coming there. There just has to be. I don't know how that cannot be the case.
And when you say rents going down, are you talking multifamily? Do you think it'll have the same effect on single-family rentals?
I think I'm talking multifamily. I think there'll be some stress in single-family rental too. I mean, one of my clients who owns several thousand rental homes surveyed his clients and found out 17% of them were out of work, but 97% of them are paying the rent because they're getting the cash flow to do so.
Right.
That cash flow has stopped. Maybe it'll pick back up again next month. But I don't know how you have 17% of your tenants lose their job and everything be fine.
Right. Unless they get rehired. Yeah, which not all.
Right. Which is happening faster than I thought. So that would be the solution. If we get them all back employed again, everything's good. And
you said oversupply of apartments coming online. Where and when?
I mean, it's in virtually every market. I mean, Austin, Nashville, some of the best markets in the country have an all-time high of apartments under construction. And if they just lost 10% of their labor force and you dump, well, I think San Francisco East Bay has a 14% increase in Class A apartments under construction. So they're going to have 14% more units available. That should be a pretty distressed market. It's not right now, but when those guys try to lease up, they're going to have to offer a lot of free rent to get it leased.
So you wouldn't be looking to buy an apartment in the East Bay right now?
Well, I would be underwriting it with that in mind. Let's just put it that way.
Or buying a distressed one in a few years.
Right.
Okay. Awesome. All right, John. Well, once again, thank you so much for joining me here on The Real Wealth Show.
All right, Kathy, take care.
Thanks.
Bye.
And thank you so much for joining me here on The Real Wealth Show. If you'd like to find out more about the areas that we think will recover the fastest from the pandemic, you can go to realwealthshow.com. It's totally free to join. And once you're there, you'll get data on different cities and referrals to property managers and real estate agents and new home builders in those areas who can help you acquire rental properties that come with management in place. Again, that's realwealthshow.com.